You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that music, that tunage means it's time to tune in to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the old OptionSinsider.com, as well as the ever-exciting Options Insider Radio Network, continuing to crank out all these great shows, despite the fact that the polar vortex has descended, and we are once again here in Siberia. But that will not stop. They're not even delivering mail out here, but you know what? We're still cranking out shows for you here in Chi-Town. You guys can get us, as always, noon Central, 1 p.m. Eastern, via Mixlr on Mondays and Thursdays, MIXLR. Grab that link, set it, and forget it. And while you're there, play along on our polls over there at Options, all the other fun places. It's all good stuff. We'd like to hear your opinion. Send us your questions. You guys certainly have no shortage of either opinions or questions. Keep those coming. We do love to hear from you folks out there. And joining me on the old chilly option block today. Let's see who's surviving the cold. I got a feeling we're going to head out to the burbs today. Let's start in our swath of the burbs out to the place where they usually have a weather shield. So it's a balmy 75. Mr. Uncle Mike from St. Charles Wealth Management. I hear the weather shield is down, sir, and it's a balmy, what, minus 15?
Something like that. We're trying to live like the rest of the world today.
You know, that was nice of you to nice of you to share our pain, sir. And also joining us from another burb somewhere nearby, I think closer, sometimes farther, sometimes in between. He gets mad when I say that. It is the Rock, not the Rock Lobster. It is the Meatball, Mr. Greasy Meatball, Mark Sebastian from OptionPit.com, by way of the land, the town that changed America, Riverside, Illinois. Mr. Meatball, welcome to the show, sir.
Hey, good to be here. Yeah, no, Riverside is the Riversidiest place in the whole United States. It's more Riverside than Riverside, California. So I will just say that, yes, it's very Riversidean today.
I used to go to an amusement park back when I was a kid in Massachusetts called Riverside, and now I believe it's called Six Flags New England. So there you go. A little bit of anecdotal history of Riversides on the start of the option block. And Uncle Mike, he lives on Riverside Drive. So everyone's got a Riverside story as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. Let's see what the heck is trading out here. Another interesting day. We are still hot and heavy, fast and furious when it comes to earnings and earnings season. A lot of big names popping off this week, including earlier this week, we had Apple and AMD. On Tuesday, eBay as well. Before the open on Wednesday, we had Alibaba and Microsoft and AT&T. After the bell yesterday, we had Facebook, Microsoft, Tesla, lots of big names popping off. Today after the bell, we got Amazon. We're going to get into that name and a bunch of other names and how they performed here in a little bit. But the market's digesting this whirlwind of earnings we're seeing right now, and actually a bit of a mixed bag, kind of an interesting mixed bag. Some of the legacy names, shall we say, out there in the Dow, feeling a little bit of the heat, off about a third of a handle. The mid caps, I should say the large caps, but the middle of the road, the Goldilocks out there is the S&P, up a mere 0.75 of a percentage point, and leading the dance to the upside, NASDAQ up about 1.3 percentage points out there. So NASDAQ feeling the love, Dow not so much, and S&P kind of in the middle, which is another interesting day out there. All this kind of mixed signals on the street. It means VIX cash taking a little bit of a break, actually, off about half a handle, flirting around that 17 handle right now. So taking a break, giving back some of that beloved vol that has been in there for quite some time out here. So earnings season tends to have that effect sometimes. Sometimes tends, unless there's some crazy surprises, some crazy outliers, tends to kind of damp down the vol out there in the marketplace, which is always interesting as a whole. As we're coming to showtime now, Apple right around 167 and a half. GE lightening it up at $10.50 right now. Even though VXX coming off a little bit at about 38.70 out there. So let's start out in St. Charles land. Uncle Mike, it's been an interesting week. You know, your beloved former stomping grounds of Apple making a lot of news. You know, they made a lot of news not too long ago when they pre-announced their earnings. Now we saw the actual thing, the official thing. And it was interesting to see because now the market kind of liking what they're seeing. Like I said, right around 161.5 right now, up about 1.5% today, or a little over two handles, and up substantially from their lows at the beginning of the year. They got down to as low as about 142, now trading nearly 167.5, so up $25 since that low. So it may be interesting. You know, people at the time were maybe questioning that strategy of pre-announcing the bad guidance and maybe taking a hit when they didn't need to, but now maybe in hindsight, in retrospect, because now the earnings don't look so bad, do they? Even though the earnings weren't that great, they weren't as bad as people were hoping or fearing. And so now the stock off to the races in the post-earnings heyday here, the post-earnings glow. So let's start there, Uncle Mike. Do you think Apple maybe doing the right thing by pre-announcing? What's your take on Apple right now? And then what else is catching your eye out there in the marketplace, sir?
Well, I think, of course, hindsight's 20/20. And of course, that right now Apple's looking really smart. The fact that they've had the rally with which they've had, Apple is now and has been for the last 10 years a very good, strong company. So I think that they know what they're doing. I think that they did the right thing with that. I think the other story today of things that are lighting up my tape. It's like you got your face in some book or something. That one company, I forget what it's called. Oh, yeah, Facebook. Facebook up 12% on the day. So the market definitely liked what they heard yesterday at the earnings announcement. And I think Facebook that's definitely the big story of the day in terms of the big mover out of the FANG names. So I think that's another one that we can talk about today as well. My beloved silver, SLV, back above the 15 handle. And overall, I think that what's happening is that a lot of people had realized that maybe life wasn't so bad back in December when, or maybe things aren't, the world's not going to end. So I guess this is what I like to refer to as the world really didn't end type of rally, in that for November and December, we had a pretty nasty pullback in a lot of ways. But buyers have come in over the course of January overall. And you can see with what's happening, especially over the last couple of weeks within the marketplaase. The other thing that I think needs to be mentioned right now, financials are lagging today. XLF is down 0.8% on the day today. Of all the major sectors within the S&P, that's the one with which it's that one along with materials not being near as big of a sector as financials, that's the only one that's not positive on the day. So that's something else to take note of. We did pause yesterday with the Fed announcement, and so the market apparently liked that as well. So we got a lot of excitement going on in the markets right now, and a lot of good things happening for those of us bulls out there.
Yeah, it's certainly crazy times here in the market. Speaking of crazies, there are a lot of crazies, and I say that with love, floating around the pit chat. Mr. Meatball, what's catching your eye in this heyday of volatility madness? And then B, what are the crazies slinging out there in the pit chat these days, sir?
Well, over the last couple of weeks, as the market was tanking like this, when we were in the 24s and 2500s for the S&P, I was saying go and buy, and especially in names Apple and Facebook, which were getting punched in the face. I said, go out and buy leap calls and just close your eyes, and they will end up being very good. So at the end of the last year, you could have bought Jan Leaps at the 150 strike for about $13, and they're trading 35 today. This is we've kind of had marked a turnaround. I think, sentiment just got so negative that now that, we're saying, things aren't that bad. That's why we're rallying. The market got kneecapped for about on the lows, over 10%, right? We're at one point we were down 20%, but we're off of the highs. We're still kneecapped about 10%. Well, you know what? Maybe that's about where we should have been. Maybe we're appropriately priced now, and people and kind of all the world is ending stuff was a bit of an overreaction, and maybe VIX is going to go back to below 16 this week. I totally think it could happen. And we got one more day of really heavy earnings tonight with Amazon coming out, and then out of the Amazon comes out tonight, and then so does Exxon and Chevron are tomorrow, and then we'll have 9 of the top 10 S&P companies having reported, and most will have reported pretty positive stuff. So, I just think that we're in a position to move, and especially for vol to drop.
Does seem like the latter, at least. Certainly kicking in, vol coming off. That'll be an interesting conversation for tomorrow as well on volatility views. Let's get into some of those earnings in a little bit more detail. Of course, you guys can do that for yourselves over at theoptionsinsider.com. Click on the earnings move and earnings move results reports generated for free. How nice of them by our friends over there at ORATS. Let's look at Facebook too, see how they performed relative to what the options market was pricing in. Spoiler alert, they outperformed. Let's see how much. Going into earnings, they were right about 150.5 on the stock. They were pricing in $9.08, and they delivered, again, this is just coming into report time, so pretty much right after the opening bell, right? A snapshot of how much they moved in the after hours. They had delivered $19.62, so pretty much over 2x that straddle. That's kind of the big dramatic outperformer here of the week. Then we also had Microsoft. We didn't even talk about Microsoft. Microsoft right now trading 105.14, off about $1.25 or so. They also had earnings after the bell last night. They went into earnings 106.38. They were pricing in $4.04, and they actually underperformed. They only delivered on the earnings move, $2.21 to the downside. That's actually coming off a little bit now. So if you waited intraday, it's only $1.25. So kind of premium sellers winning the day out there. Patient premium sellers winning the day out there in Microsoft. Also have our old friend. How crazy of a day is it when Tesla has earnings and we don't even talk about it because everything else is kind of sucking up all the oxygen in the room. Let's pull up our old friend Tesla, see where they are right now. Going into their earnings report last night after the bell, they closed at $308.77. The market was pricing in about $28 This might actually be. I didn't think I ever would say this, Meatball and Mr. Uncle Mike. I didn't think I'd ever say this, but Tesla might be the big winner for premium sales in terms of actually under delivering on their straddle. Tesla is blowing the doors off. They priced in about $28, and the actual earnings move coming into the report time, $2.20. So about a 92% is all they delivered in terms of coming in on their vol. And actually, if you waited intraday, they're only off 0.75 of a point right now. So that pretty much all of that $28, you kept a good chunk of that if you were on the premium hard. I can't remember the last time I said that about Tesla, if ever. So a huge vol crush coming in there on Tesla on this one, which is kind of interesting. That 300 level is always kind of that magical, mythical level everybody watches. When they break through 300, that's when the hand wringing starts really to happen. A lot of people like to play on that 300 put level, so everyone watches that level, and they were flirting around it going into earnings, and they did not break it. They stayed north of it. So that's impressive. And all you guys out there who are harvesting the risk premium in Tesla, I know there's quite a few of you, can breathe a sigh of relief because Tesla delivering for you guys on the doing nothing. That's kind of the dream of the premium seller, right? You sell a meaty, about $30 straddle, and it does nothing. And that's pretty much exactly, at least so far. Things can change, but so far, that's pretty much what's happening. So that vol coming in pretty aggressive. That might be our winner in terms of under delivering on the straddle, which is obviously what our premium harvesting type audience likes to see. Let's look at a couple others really quick. Let's go back a few. Again, you can find these for yourself. Go to theoptionsinsider.com, search for ORATS, ORATS. All these reports will come up for you there. You got Tesla. Let's see, eBay was the day before. eBay, they had closed $33.72. They were pricing in not quite $2, $1.91. And they, I don't have the results here. But this is the projected move. They're pricing in $1.91. Let's see where they are right now as of showtime. So obviously this is not quite in the reports limit. They are at 33 and a quarter. So they're pretty much almost unched as well, about 50 cents off. So if you were patient, you could keep most of that. But again, $1.91 versus $30. Much bigger deal out there in Tesla land. So it's been a fascinating week. We still have some big ones coming up here after the bell. Amazon, we'll take a look at that one in a little bit. Hopefully before the end of the day, we'll have a nice earnings move report prediction for that one on the website as well, so you can see exactly what they're pricing in to Amazon, as well as what they've delivered in past quarters and other things like that. Speaking of delivering, let's see what's delivering in the market right now. What's lighting it up? Our top 10 most actives out there right now. Let's go from the bottom to the top. BABA, number 10, 130,000 contracts. Number 9, Amazon, with 145,000. About 61% of that on the call side, so a little slight call bias out there. Number 8, NVIDIA, how the mighty have fallen. It was number 1 a couple of days ago, not for good reasons. It was selling off hard. Now it's back down to number 8, about 156,000, 55% of that on the call side. Microsoft, number 7, about 250,000 contracts, almost 70% on the calls, which is interesting given the fact that they're selling off pretty hard today. Number 5, what do we said? 10, 9, 8, 7, 6, Tesla. Tesla, number 6, 265,000 contracts there, 56% of that on the call side. Number 5, Bank of America, with 323,000, 74%. They've been call biased for a while out here, strongly call biased. And that happening again today, 323,000 contracts on the tape. Number 4, good old Apple, usually number 1, now number 4. They did almost 1 million contracts yesterday, by the way, so doing VIX numbers out there in Apple yesterday. About, 469,000 contracts today, 61% on the call side. AMD, number 3, about almost 500,000, 57% of that on the call side. Number 2, Facebook, tearing up the charts today, 692,000 contracts on the tape, 65% call biased. Go figure why that might be. And number 1 today is GE, nearly 1 million contracts on the tape in GE today as well. So again, putting up VIX or SPY numbers out there in GE, with about 57% of that coming in the call side. Since we're talking VIX and SPY, I was checking on them really quickly as well. The big indices coming into showtime. VIX was very active today, actually, but almost 500,000 contracts, about 450,000 on the tape at the start of showtime here. And the ADV is about 487. So we're already seeing Big whopping numbers out there in VIX land. SPY about 1.5 million, ADV about 3 million. The SPX 751,000 contracts on the tape, 1.4 million ADV, and the Q's doing about 661,000, nearly 800,000 in the ADV. Mark, you seen any interesting prints going up in VIX options today? Because there's certainly a heck of a lot of them trading today.
Yeah, I saw been a lot of big downside trading, and things have been moving around. Vol got they've come and bought a little bit of it after it getting completely crunched yesterday or on the open. But yeah, we've just basically seen there's been a lot of downside speculation in the marketplace as a whole, which I think is kind of interesting.
Well, we've been saying that for a while on vol views, that they haven't been afraid to crush the upside, not so much buying the downside. Maybe they're coming for the other part of that now. Now they're deciding to buy the downside as well. We'll parse all of that and more tomorrow on Volatility Views. Meanwhile, it's time for us to keep on rolling into our next segment. It is time to go into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's see what we got hitting our tape, our eye of Sauron, always scanning the options market, always watching. Find some interesting nuggets, some interesting gems. We deliver them for you here on the Odd Block. Let's kick things off. We were talking tech, a lot of big upside in tech. That seems to be exactly what someone's got on the brain here for our first section here, our first segment, our first winner here in the Odd Block. Well, I'm not sure. I still don't know if it's a winner or just a shameful thing to be profiled in this segment. Probably a little bit of both. But Dropbox lighting it up today. Excuse me, ticker symbol DBX. Trading today right around $24.86, up not quite a buck, but close to it, nearly 4%. This is a name it's kind of actually had a fairly staid year. A year ago, they were trading about $4 north of where they are right now, about $28.50 or so. And then they kind of spiked to about 42 back in the go-go days of June, because who doesn't remember the big spike of Dropbox in June? That was a very brief, momentary thing, because they sold off pretty much again the next week. They were down to 31 again, so didn't last too long, that momentary euphoria there for a Dropbox. And they kind of vacillated around that 30 level and kind of kept going back into the mid-20s and kind of vacillated around there for the rest of the year, pretty much to where they are right now. So it's kind of been somewhat, except for that little pop in June, pretty quiet year. But you know what? That's not stopping someone from putting on their love goggles here for Dropbox. Someone coming in today and opening 15,000 of the Jan 60 calls. Yes, 60, 6-0, for 20 cents. And these are not Jan, these are Jan 2020, I should say. So Jan of next year, obviously Jan already off the boards for this year, but not in the weeklies or anything like that. This is Jan of 2020, 60 calls. So you don't need, not quite a 3X move, pretty darn close to it for these calls to really, really come into their own. This is opening, by the way, no OI there, so not closing. And these things were a nickel bid at 20 cents coming out. And this guy gobbled up the offer for 20 cents 15,000 times. So there's pretty much no way he sold. If he did, he's got one of the best brokers going. Again, he could have done some funkiness with stock. I don't see this going up as a stock leg. I can go check to make sure. But that would be a damn good print if he did indeed write these at 20 cents. So we're going to go on the pretty much assumption that he's opening and he's loving himself some Dropbox. Now, again, he could be heavily short and be put in a worst case scenario kind of hedge against that. But that's still a long way. You got a lot of upside between 24 and 60 that short could come against you. So that doesn't really make a heck of a lot of sense either. So, Mark, this seems to be someone really loving themselves a whole freaking heap of far upside in Dropbox and doing it 15,000 times for 20 cents. I'm guessing, I'm going to go out on a limb right now, Mark, and say this might be your favorite trade of the year so far.
Oh, yeah. I mean, how can they lose? This person is extremely bullish, so this will be an interesting trade to keep an eye on. I will say that.
Yeah, I'm going to mark this for our to be watched category. But I mean, it's just weird. This is not like a high flying stock. This is not a biotech. It's not a name that's delivered anything close to this kind of level of volatility or price action, at least over the past year. The highest they got was, oh, good.
I'll be interested to see whether the takeover gods are come for a visit of Dropbox.
60 though. That's an impressive premium.
It is an impressive premium, but you know the company. It's a good company. I mean, I'm everybody knows it. And so it'll be interesting. Has it ever traded that high?
I'll have to look. I know over the past year the high is, let's go max here. The past year the high is 52, and the all-time high. Oh, well, I already switched to our next name. Let me go back to our previous name. That would be better. There we go. Now let's go out to the max. Let's see. The previous high was, yeah, I don't think it's ever flirted with that high. That, as far as I could see, yeah, 43.5 is what I'm seeing for the recent high, and that's kind of looks like the big one out here as well. I don't see anything beyond that. And I'm going out as far back as this chart is kind of screwy, but I don't think it has, at least not in any sort of recent near-term level. So this is the name that's I mean, even when it hit 41, 42 last year, it came off that really quick. So it couldn't sustain 41. This guy wants it to head up to 60. Now, obviously, it doesn't have to go all the way to 60 for these calls to start making money. If it starts moving, those calls will look good, but it's got to move. It's got to move quite a bit. And it's got a year, so it's got time, but still, those will start to come in. And next thing you know, they're at 18 cents, then 15 cents, then 12 cents. And then he needs even more of a move just to make back to where he was. So this thing's got to kick in. But I'm with you, Mr. Meatball. We'll put it in the to be watched. This is takeover paper. This is still absurdly optimistic takeover paper, because if someone takes them in, let's say they double it, they're going to be 48. These calls still not going to have a lot of love to them. So interesting stuff here. Let us know what you guys think. Is this guy's just on some crazy pills here in GE, or maybe is he onto something, or maybe you just want to take advantage of that and trade some verticals? Whatever you want to do out in DBX, let us know as you move on. I kind of gave the cat out of the bag for what our next one is. It is General Electric, good old GE. As I mentioned, they are dominating the tape today. GE just on fire. They were putting up close to 1 million contracts. Let's see if I update. That was at the start of showtime. Let me see if I update that number right now with the latest totals, how we are looking here for GE. There we go. Most active. There we go. Yes, over 1 million now. 1.01 million contracts for GE. That's on an ADV of 313,000. So it has been moving of late. Obviously, we talked about the GE puts last year and the big sell-off. Kind of the big winners in our odd block last year. Many, many tens of millions of dollars in the pocket of that fellow. So GE has been rocking and rolling of late. Today, rocking to the upside, up 1.25. Market liking what they're seeing out there in this post-earnings blush for them. Trading $10.34 right now. Let's see what the market was up to here in terms of the options market. Let's see what the big print out here was. And it was out here, again, kind of opening paper, but to the downside. It was the Feb 10 half puts trading for nearly 50 cents, 48 cents out here, opening 11,000 times. They were 48 cents at 51. So it looks like actually someone perhaps crushing a wee bit of a bid out here in GE, as the rock lobster maybe would refer to them, line in the sand puts. Again, this is a pretty tight market, 48 cents, 51. So you kind of have to read into that execution with a little bit of grain of salt. It's not quite the nearly 20-cent wide market on those out-of-money calls that we saw in Dropbox out there. A little bit of a different beast, much more liquid, obviously, in GE right now as well. But still, first blush seems like they're hitting the bid and doing it for size 11,000 times and opening. Let's go back at the past year out here in GE. We all know a year ago they were doing better. They were trading $16. Then, of course, they had the dark times that were Q4. When a lot of the market had their dark times, GE kind of led the dance to the downside. They went from about 13.5 all the way down to 6. They got as low as 671 in mid-December, of last year. So yeah, dark times indeed. They haven't quite doubled from there, but they've come up quite a bit, right around 1030 right now. So up almost 4 handles from those dark days of mid-December. And looks like someone here deciding that they're not going to revisit those, at least in the near term, blasting out 11,000 of these 10 half puts. Interesting for several levels. First off, these are in the money puts to the tune of about nearly 20 cents. And secondly, these were deep in the money puts as of yesterday. The stock was $1.25 lower out there. It was pretty much around the $9 level. So these puts were almost $1.50 in the money. He's selling them today for 48 cents. Kind of interesting choice out here, Mr. Rock or Mr. Meatball. I apologize, Mr. Meatball. First off, are you buying that these are, as your friend says, line in the sand puts, or you think maybe there's more going on here? Maybe they're hedging a little bit. And then B, if the former, what do you think of drawing a somewhat aggressive in the money put line here in Feb in GE?
Yeah, it's an interesting level. And, if you look at how GE is traded, maybe someone's looking and saying, I've made some money back. Now I want to make sure I don't, go out of business, doing this. So I'm just saying maybe that's what you got here.
Yeah, seems like it. Interesting stuff out here. Let's go on now to our final name here in the odd block. Let's see what we got here. All right. It's pulling up weird prints here for this name here. Let me pull it up again here really quickly to make sure everything is up and up. There we go. All right. Yeah, sometimes during Showtime live shows, they tend not to like here what we're up to. All right. There we go. Tallgrass Energy is the one we want here for our last. There we go. Why was that to be fused? The system did not want to play ball with ticker TGE, but that is our ticker for our final one here. TGE, Tallgrass Energy, trading today $23.42, off about 76 cents or about a little over 3%. This is a name. Let's go back and look here now that we have the quotes working here. A year ago, it was pretty much almost exactly where it is, about a buck north. It's $24.40 a year ago. Then they kind of sold off in all the maelstrom and beyond of February into the high teens, about 17.5. Then they rebounded for a bit and went up on an upward trajectory all the way to a good day in August 22nd, $25.86. That's where they hit their high of last year. And then they kind of sold off again down to 23 and back down to 20. And they've kind of been vacillating in this 20 to about 23, 24 range recently as well. So it's kind of been vacillating around for a little bit. Let's see what people were up to today. About 4,990 of the July 22 half puts coming in for $1.45. This is actually below the bid, about a dime below the bid. These things were $1.55 at $1.85. Someone not only crushed the bid, they crushed through it a dime to get all about 5,000 of these done. This is opening as well, so no closing OI going on here. This is pre-earnings, even though they have a couple cycles between now and July, obviously. They actually have earnings today after the bell, but I wouldn't call this an earnings trade. So interesting stuff. 22 half, that would seem to be not quite where it has bottomed out lately, but pretty close. It's bottomed out in the last few months around 2061. So 22 half, take $1.50 off at around 21. That's pretty close to that level. Looks like someone may be indeed drawing a line in the sand, or it could be an out of sequence print as well. It went up late, so you never know. Sometimes that out of sequence could be messing with the execution analysis as well. But it seems on the surface like it is indeed a aggressive line in the sand. Mr. Meatball, are you buying that? You think this is a sell as well? And then B, if that's the case, think they had to crush the bid to get their size off. TGE, not exactly a big name. To do 5,000, sometimes you have to be a little bit willing to fudge with the NBBO. And what else are your thoughts here on these apparently line in the sand puts in our old friend, everyone's favorite, TGE?
I think you've got the nail on the head. Probably needed to get a lower price to get them all done. Customer clearly wanted to get a total of 5,000 done, which was clearly important to him, and that is where we end up with with this. That's how that happens.
Does it make you thankful that you play mostly in VIX and the S, where you don't really have to go through the bids and offers pretty much ever?
Yes, it does.
Like, I can't imagine the size you have to do in VIX to go a dime through the bid. It'd have to be some pretty impressive size.
I've seen some craziness.
All right, speaking of craziness, let's see what you guys have in store for us. It's Thursday. It's time to break open the mailbag.
time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys take the reins, questions, comments, shots at the meatball, all sorts of good stuff. We've got it all ready for you today. Speaking of ready, here we go. Let's see. We got a couple of questions going off for you today here. We started at the beginning of the week. We asked you, it's a big week for tech, big week for earnings. A lot of the names you guys love to trade. We see the volume. We hear from you guys that these are the names you love to trade. A lot of them are reporting this week. So we asked you, quite simply, pick your favorite. Which one you want to dance with this week the most? Gave you 4 choices: Amazon, Facebook, Apple, and Microsoft. And then we followed it up today, given today's action. I put a little flash poll here right at the start of the showtime. I asked you guys, hey, Apple and Facebook both sold off recently now, both kind of rallying, both hovering around that mid to high 160 level. So both at very similar price valuation, at least overall price levels on the stock. So just very simply, right now, looking out a year, if you had to buy, let's say, a 5% out of the money leap on one of these names, which one would it be? Apple or Facebook? Or are you sick of them both? You have some interesting thoughts on this one too. Let's start with Uncle Mike, sir. I will let you play in both questions. First off, which of the 4 big earnings names you think people are choosing? Apple, Facebook, Amazon or Microsoft? And then today's flash poll, which one do people want to buy the out of money call on for a year? Apple or Facebook?
In terms of earnings, I think I will go with Amazon, just based on how the poll has been thus far. And I'd say in terms of the out-of-the-money call, by all means, we got to go with Apple on this one. If it's something that I have absolutely no skin in the game with, then I'm going to go with what I was loyal to at one point and come with what brought me. Apple, baby.
Okay. Interesting stuff here. Getting some reports here on what we saw in the odd block, which is interesting. We'll get to that in a little bit. First off, Mr. Meatball, same question for you. You think people are buying that 5% 1-year leap out of the money call on Apple or Facebook, or they hate them both? And then also, which of those names did they want to trade this week the most? Amazon, Facebook, Apple, or Microsoft?
I'm going to say they wanted to trade Amazon, and I will tell you that I would do the Facebook leap. And I think the audience is probably saying, I don't want either.
Interesting. All right. So let's see. Right now, coming into, there's a little bit of time left on our big weekly poll. And you guys, you're still loving yourself some Amazon to the tune of 42%. They haven't even reported yet, given all the love we saw for Facebook and others. Not a lot of love for this in this poll. 22%, number 2, a distant number 2 for Apple. Number 3 is Softy, 20%. Number 4, Facebook, only 16%. No love for Facebook. And then looking at our flash poll right now, this will kind of expire pretty quickly. So get on over there, add options if you haven't voted already. By the time you hear the show, listeners, it probably, well, actually, we might be able to get it up within time, but chances are this poll may be expired. You can go look at add options. Our other poll will still be running. Right now, Apple leading that dance there, which is kind of interesting. 36% saying they like Apple, 27% say they like Facebook, and winning the poll, 37% hate them both. I throw that in there just for the snark factor. And people love themselves a little bit of snark. Speaking of popping ins, let's see. We've got our old friend, the Flowmaster, Mr. Schwartz, popping in saying there was another leg to those TGE puts. All right, that would make more sense, Mr. What is it here? Mr. Meatball. I'm sorry, Mr. Flowmaster. I'm looking at your system here. He said the TGE customer sold 10,000 July 22 app puts at $1.40 and also sold 10,000 of the July 25 calls at $1. They crossed it all, which is why the prices were kind of weird. And so they did that strangle for $2.40. So interesting stuff. First off, I will say I pulled that from your system, Mr. Flowmaster. So your system did not give me the July call leg. So Nana Nana Boo Boo, I blame you, as my little guy would have said when he was little. But secondly, Mr. Meatball, does that make
your little guy was never little?
That's true. He is a monster. But that's a conversation for another day. Does that make more sense?
My son is tall. He really is. Your son is what, a year older and an entire head taller. I've never seen a kid that big.
Yeah, he plays basketball now, and he's got the height, not much else, but he's got the height, and he's been tearing it up out there of late, which is kind of fun to watch. But that's a conversation for another day. Do you like this strangle even more than the puts by themselves?
I think that probably makes more sense. I think that makes more sense. I don't know if it's gonna end up being a great trade, but it certainly makes some sense.
I'll put it in makes a little bit more sense category.
And can I just say that in terms of Facebook not getting any love, that in and of itself confirms that I'm going to be that is the best one to trade.
Well, it is weird. Apple has been falling off the radar with our audience of like every poll we put Apple in, Apple's like 3, 4. They didn't want to buy the stock when it hit 150, which obviously in near-term hindsight didn't look that good. But people were closing out those puts when they got hit at the 150 level. They wanted to roll them down. There was not a lot of bullish near-term love for Apple, which is kind of interesting. Now they're winning this poll. Again, this is an early flash poll, so it has to have a little bit more time to bake. But interesting stuff out here. Speaking of interesting, this one looks like it's up your alley here, Mr. Uncle Mike. In fact, I think this is for you. Though he does mention the meatball. I guess on me and the Rock Lobster, just chop liver on this one. This comes from Jarryd Smith. He says, I have a question for the podcast that, as a long-suffering Bills fan, I hope a long-suffering Bill can answer. So I assume that's got to be you, Uncle Mike. So he says he wouldn't turn down the greasy meatball as well. So I'm just going to go take a break while you guys answer this one. He says, what is meant by, quote, the tent? For example, stop the trade when it exits, quote, the tent. Let's use an at-the-money butterfly. Is it the ending, quote, tent when at the end of the trade it would be a max loss? Or at the end of the trade that would still be a profit? Or something else. For example, if I had a 100, 150, 200 strike at the money butterfly on for $25, would I exit it if it hit 100 or 200 or somewhere around 125 to 175 or something else? Thanks, Jarryd. So, Mr. Uncle Mike, as our resident Bill, you get to answer this. I don't know if you use this term. I certainly don't use this terminology of the tent. So if you have,
yeah, that's a very retail-y, coming from some quack mentor type of guy to hear that. I don't know who he's getting who he's listening to that's saying that, but it's probably someone that's presenting themselves as an expert that's actually an amateur.
Are you saying maybe someone on a late night infomercial, perhaps on a Learjet or next to a Ferrari while they're doing their spiel?
Oh, have you seen those commercials? Like, hey, I'm blah, 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 we're the fastest growing. I can't, YouTube can clearly tell that I do some options education because all it does is slam me with,
yes. I got one the other day. It was pretty impressive because there's a certain cliche to these commercials. They're going to be in a jet, probably not going anywhere because they can't afford to actually have it run. They're standing next to it, or probably standing next to a car that they rented, like a sports car, and they're the best trader in the world. Which first, that should be the biggest red flag. When someone says that to you, get the hell out of Dodge. And then,
I can tell you this: the best trader in the world does not tell you that he's a good trader.
He's not on a YouTube video.
He's
hawking his wares.
He's keeping himself very quiet because he doesn't want anybody to know what he's doing.
He sold his algo to Goldman years ago, and he's out of the business on his own private island. But yeah, that's all fun. We can have fun with that for years. But Mr. Uncle Mike, since this came to you, I'll let you have at it, sir. First off, maybe tent methodology aside, if you use that term, have at it. I would shame you if you do, but I won't hold it against you right now. And then B, maybe outside of that, his other question is more about where should he have entry and exit points for a butterfly, as well as, what is your outlook for the Bills, I guess?
Okay, well, in terms of the tent, I got to be honest, I've actually never even heard that term before, and I've been in this business for 15 years, and so that's something new to me. So I guess it is an amateur term.
So here's what the tent is meant by that. So a butterfly, the expiration risk chart, right? Because that's the most important part, right? Expiration. It actually it looks kind of like a tent, and so
yeah, I can see that.
The tent is actually where the tent is not. Typically, the tent is not all the legs. It's actually where the legs cross the PE, the break-even mark on a chart. So you're talking like, how much do you pay for this butterfly? So if you pay $10 for the par 150, 200 butterfly, your tent is actually going to be at 110 to 150 to 190. And, setting your P&L targets, I've always been a proponent of just setting it based on what your P&L is and what your max loss is and actually just having this thing called risk control instead of looking at a pretty chart to make your decision, because those pretty charts can move on you. That's one of the things they don't tell you is that, everyone thinks that those charts are great, and by all means they're fine, but they're not. That tent can change. Because they'll be kind of, here's what your P&L is now type of chart, and that can change. And so that is something you have to take into account when you're trading, is that the tent can move on you.
I think I know the name of your next webinar. When the butterfly escapes the tent, huh? What do you think?
I love it.
Love it. Yeah, it's probably someone that's a Miami Dolphin fan that did that, as I'm guessing. So
yeah,
that's probably the problem with that whole thing. So
I think
I'm with Seabass on this one. I typically don't look at their risk chart because of the fact that you have so many. There's 6 factors of option pricing, and when you have 3 legs with one specific trade, there's a lot of moving parts to a butterfly. You got to look at more than just what the tent is, so to speak, because there's a lot of things that can happen within that trade. So what I look at whenever I'm doing a butterfly is, how do I put this? Everything, not just the tent.
Yeah, this is something out of an organization that does not sponsor the Options Insider Network. So
I am mildly curious. I may have to go look around online and see which mentoring guru uses this terminology.
Yeah, well, it comes. You'll see there is a brokerage firm that specializes in options in heavy options that likes to talk about in and out of the tent as well on what may be their own network.
Perhaps that is.
And in fact, they might talk about it on both of our favorite networks, which like to,
that could
miseducate people.
That could explain it then. That's the funny thing.
Yeah.
That's the funny thing when you're out there producing so much of your own content on your own network. You don't have a lot of time to consume all these other networks out there. So, but interesting stuff. I won't chime in, Jarryd, because you didn't ask for my opinion. So I'm just going to keep on rolling. I'm just kidding. I'm just giving you a hard time. But we do have to keep rolling. Let's see. Old buddy David Lincoln commenting on our poll there for earnings. He said he would like us to include NVIDIA, even though it's not a tech stock. He's still on the old TLRY kick. How's that kick looking for you? Let's look it up really quick here and get a quote on our old friend TL. Where are we at? Up, looking good today. Actually, up 370, 81.17. So it's rebounded. Actually today it's up quite a bit. Let's see, over the year to date, it's from 70, hit as high of about 100. So it's been from 70 to 100 just this year, so far in January, and now it's back down to 81. Wow. You want your vol, TLRY, aka Tilray, delivering in spades. Let's see here. Old friend F Contango Trader sent this in earlier this week. He said someone put a list of the top OI changes in Apple options and options, and he said check out the Apple OI 215 and 210 put strikes. And according to this chart, they were adding OI for size, 19,600 of each. So it looks like a Feb 215 210 put vertical probably traded out there. Kind of funky if that's the case, because those handles are many handles in the money. Interesting stuff here. I forgot what day this is actually from, so I can't go check it off the top of my head. But I'm going to look at this after the show and see what day those Apple OI 215 and 210. Let's pull it up right now, actually, really quickly. Since the Flowmaster chimed in before, I will use his sweet system to see how we're looking here in terms of OI. Let's see if those are anywhere near the top positions here in Apple. This was Feb 215 puts. Yes, there's 27,500 of those bad boys open. The 210 puts have 26,000. So it looks like these Feb puts were actually are open for size, which is kind of interesting. Again, I don't have time to search to see exactly when they were open, but I'm pretty sure it might have been this week, judging by this chart. So a few days ago, which is interesting. Thanks for bringing that to our attention here, Mr. F. Contango. Usually he chimes in on vol views, chiming in on this show today. Let's see. J3 Dingle chiming in. Oh, I think he's talking about when he listened. He chimes in all the time. I think we were talking last show about all of our good reviews. And by the way, Mr. Meatball, all of our bad one-star iTunes reviews somehow involve you. Like they didn't like what you said about Apple. They didn't like what you said about something else. It's always somehow it's got the Meatball. It's
always me.
It's always the Meatball. 1 star. He slammed Apple. I don't like it.
Is that what it'll say?
That's what one of them said. Yeah, they actually went all the way to iTunes and slammed it with a 1-star review because you said something about Apple.
What is wrong with people?
People are interesting folks out there. That's what we said. So he was joking, saying he's going to leave a bad review for pronunciation of what is that? That's Vale, I believe. Actually, I think I'm going to blame the Rock Lobster. I'm going to say he was calling it Vale, not me, not at all. But we do process a lot of tickers here, Mr. J. I'm not sure if you know that, but a lot of tickers go by our screens all day. It is easy sometimes to just pronounce them all phonetically, but you're right, that is Brazilian. I believe it's Vale, something along those lines. Portuguese is not exactly my strong suit. This comes from someone who's fairly fluent in a Romance language of Italian, and I can make my way through France. I can certainly make my way through Italy. I can muddle my way through Spain. When I got to Portugal, I couldn't make heads or tails of the language out there. I think Portuguese is a Romance language in name only. There's sounds in there, hard K and SK sounds that you don't see in any other Romance language. It sounds almost Germanic to me, and weird S sounds. So yeah, long story short, my Portuguese pronunciation is not going to be up to snuff. So if you're going to ding us for that, then have at it, sir. I will allow it. All right, let's see here. Mr. Uncle this might be a good one for you here because this is someone looking for some guidance. This comes from All or Nothing Rookie Jan. That's a mouthful of a handle. He says he or she bought 2,700 Facebook shares yesterday before the earnings. He wants to know, does he hold or lock in some profit, guys? And he puts a link to his account here where he spent some money, $2,700 at around, what was it, 146 at the time. It's going to add up close to $400,000. I'm thinking of moving it all over to Amazon and seeing if I'm still lucky. I wish I could do options, but I don't know enough, and I heard I could lose all my money. Uncle Mike, this sounds like a person who I think could probably use your help. First off, it sounds like he mentions later that he kind of put all of his portfolio into Facebook before earnings. So maybe you could counsel them first on that approach. This is the roulette approach to earnings here. And then B, how could they use some options? Because he's scared. He says he's going to lose all his money.
Okay, so with this one, I would suggest if this person is live, call me before the close today. I think that would be a wise thing to do. You can go to my website, get my mobile number off my website, stcharleswealth.com, and we can talk about this.
Yes.
So that's my first suggestion.
Please call Mike.
But with this, I think that whenever you put your whole portfolio in one stock, you're asking for a problem. And here's why. It worked well with you with Facebook. But if you go to the well again, you're going to feel that joy that you felt with Facebook today, which, by the way, congratulations on your whole portfolio going up like it did with Facebook.
Congratulations on your whole portfolio.
if that's what your whole portfolio was in, as the question said. But here's the problem. The worst thing that you can do is have a trade like that and go all or none rookie, as your handle says, because of the fact that you're going to keep doing it until you learn your lesson. It reminds me, and I guess I kind of am referencing this show again on this show, is Deal or No Deal. People always continue to go the well one too many times, and they don't get the best deal when the odds are clearly against them. And I think right now, I would recommend that you not put everything into Amazon.
I would agree.
Again, And if you are looking to do a portion of your portfolio, there's some ways with which to buy some calls. There's some ways to take a smaller amount of risk to not bet the farm on Amazon. So if you want further information, please call me. I'm more than happy to. I can't give specific advice, but I can definitely make the phone call worth your time if need be to kind of hopefully prevent a disaster from happening.
Yeah, I don't know if this person is live. I think this came in via Twitter, so they may not be live. If you are, by all means, hit up Uncle Mike. I guess you're right. When you look at the handle, I guess we shouldn't expect anything different. The handle kind of says it all. It's all or nothing rookie. So they don't know what they're doing, and they're going all in on every trade. Yeah, you might want someone to help you mitigate that approach a little bit, all or nothing. And perhaps, just perhaps, sling a little options in there too, which can be, if you're worried about losing all your money for options, and yet you're doing this stuff with the stock, you're already kind of down that rabbit hole a little bit. So maybe have someone come in and help you with this stuff. So you won't be a rookie anymore. Maybe you'll graduate to somewhere in neophyte. How about that? All right, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we break down what the heck is going on our screens. What are we watching for the rest of this week into the old weekend? I don't think we have to look too far beyond the bell today, listeners, to see what everybody's got their eyes glued to. Just judging by our poll, 42% of you want to sling some some Amazon, and that's what's popping off after the bell. That's the big name after the bell, unless you're really excited about Symantec. That's out there too. But the name everyone's looking at right now, Amazon, $1723.92 right now, up $53.50 or 3.25% just in today's intraday love fest out there on the NASDAQ. We'll see how much that is going. I don't have the earnings move report here in front of me. I'll see if I could piece together what we've got going on here. Meanwhile, Mr. Uncle Mike, sir, what are you watching for today and the rest of the week?
Well, of course, earnings, but then the other thing that needs to be mentioned, the unemployment report coming out, or non-farm, I should say, coming out. So I will be eagerly awaiting that. It's 7:30 Chicago time, as per usual, the first Friday of the month. So we'll see if it's a big mover or not, if it's the news the market wants to hear. If the market does appear to be in rally mode, so the fact that the Fed seems to be more accommodative based upon what we heard yesterday, this could be a market mover. It could be going to the upside, but as always, you never know. Make sure that you manage risk appropriately and don't put all of your portfolio into one stock for an earnings announcement.
That's probably words to live by. Mr. Meatball, same question for you, sir.
Yeah, I think Amazon's going to be important. We got Google next week, non-farms, of course, and that's about it. I think that we're going to have I think we're going to see the market continue to be kind of strong, and I think that it'll be interesting to see what the next couple of weeks. There's a lot of FOMO out there, and that is driving markets. So that's something to be on top of. FOMO,
tense, all sorts of madness hitting the market, putting all your money in one name. All sorts of madness going on out there in the world of options. But unfortunately, that music means we're done with at least this start to our journey today on the road to options nirvana. If you say to yourself, I need more options digging in, maybe not just to equity volatility, even though we're covering that, and index volatility. Maybe you also want to talk a little bit of crude volatility, options, maybe what's going on in the metals, rates, beans. Well, guess what? We got you covered in about 30 minutes coming up on TWIFO, or if you listen on the podcast, wherever you get this show, you'll be getting that one too. So stay tuned for that. I'll be joined by my old buddy Blue Putnam from CME, the economist-in-chief over there, who actually has some pretty interesting stuff to say about all the different product categories out there. So stay tuned for that. Looking here at the Amazon straddle really quickly. Looks like it's about 112 or so is what they're pricing in terms of that Feb, right around 173, 172 half straddle there. So interesting move. They've already moved, 50 handles intraday. So interesting stuff out there. Pricing in a lot of juice. We'll see if they can maintain it. Let's go back, or maybe they'll be like a Tesla and it'll all evaporate. And all you out there harvesting the risk premium will be quite happy. Well, let's go back around the horn. Let's start with Uncle Mike. Sir, what is going on? People want to learn more. Maybe they don't want to put all their portfolio in one basket. Where should they go? What should they do?
Give me a call. Find my information on my website, stcharleswealth.com. A lot of exciting things going on. And check out my site and give me a call. We'll talk about how not to put your whole portfolio into one stock.
All right, and Mr. Meatball, same question for you, sir. Maybe if I want to learn about your upcoming webinar about butterflies and tents, or maybe something else. Perhaps even I've heard rumors of a masterclass coming at the pit. Where should I go? What should I do, sir?
Yeah, go to optionpit.com, check out our blog. We post good stuff there every day. Every week I do kind of an idea of the week. I maybe did those Facebook leap calls as one of my ideas. So, yeah, go to optionpit.com and come and visit us.
There you go. Go to optionpit.com. Visit the man. He's lonely out there in Riverside. He needs some love. So hit him up. Optionpit.com is the place to go where you could virtually join him and have a good time. And on behalf of the Meatball and Uncle Mike and indeed myself, I thank all of you for downloading, streaming, subscribing. Stay tuned. We'll be back. If you're listening live, stay tuned. We'll have Twiphone in about half an hour. We'll beam in some fun stuff in between for you guys to enjoy. Maybe some skip strike trades on Amazon, all kinds of fun stuff. You never know. And we'll see you back here in 30 minutes for Twiphone. Otherwise, we'll see you back next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.